What's up, traders? So today I'm going to show you how I get paid to buy stocks at a discounted rate and cheaper than everybody else. And on top of that, I'm going to show you a few actual trades within the Moomoo platform. Now, if you're new to the channel, my name is Rashad. I am a full-time options trader, and I've been blessed to be able to generate enough income from the stock market to pay for the entire lifestyle of both myself and my family. Now, the first thing I need you to do is go ahead and hit that like button and help push this video out to more people so they can start building their wealth as well. And do remember that this is not financial advice or a recommendation to buy, sell, or hold any equities or options contracts. Now, fans of this channel know that I always start off my videos with a word from God that has to deal with money, wealth building, or business. And today's word will come from Proverbs 21:5, and it says, "The plans of the diligent lead to profit as surely as haste leads to poverty." And this verse just simply discusses the benefits of planning ahead versus those who try to do things at the last minute, which typically results into bad decisions. And when it comes to the stock market specifically, you have to have a plan. You have to go into a trade having that information backed up by the data that is currently available. All right, if you go in and you just buy stocks for any reason, or you buy calls or make any trade thinking that you'll hit the lottery from it, that usually ends in a bad result every single time. So make sure that you plan ahead with everything in your life, but definitely when it comes to the stock market. And I, of course, have to shout out a few people who are absolutely planning ahead, which is our members of the Trade to Freedom community. And Gabriel says, "First time I ever posted in the Share Wins chat. First Leaps closed 10 contracts, which I held for approximately 45 days for a 55% profit of $3,500. Leaps are the real deal. Thanks, Rashad." And I simply commented that this is just the beginning. Congrats to you, sir. So Gabriel, congrats to you. And then we have Lee Joe here. He says, "Another awesome week of gains." And we can clearly see that this man printed $5,764 in a single week within the stock market. So Lee Joe, absolutely amazing. Now, I know personally over the last few months, Lee Joe has made about $16,000 per month. And so it is a good possibility that we will be able to get him over that 20K mark for this month. So congrats to you, man. Then Chandra says, "Great day to close the weekend. Close Dash and Hood Leaps and UNH Poor Man Cover Calls." And we can see that she made $4,039 from those trades. Congrats to you. And then looking at Paul, we can see that his account went up 6%, well, over 6% in a single day. And he printed $4,306 on that day alone just last week. So Paul, that is an amazing blessing. Congrats to you on that one. And then we have Steven here, who is up $12,422 month to date. And he actually posted this on the 21st of the month. So there is a good chance that by the end of this month, his results will be much higher. So Steven, keep doing what you're doing. Keep printing the money and using the stock market as your personal ATM. And if you know anybody who would like to use the market as their personal ATM, tell them about the Trade to Freedom community. The link is below in the description. But not only will you get my exact trades as soon as I enter them, in which we have strategies all the way from 0 DTE for our day traders, all the way up to monthly income strategies for our people who are a little bit more busy. But you'll also get my entire options framework via the Trade to Freedom course. You'll have full access to ask me questions at any given time. And lastly, you'll be within a community of other traders who all have the exact same goal. So if you do know anybody, the link is below in the description. But with that information, let's get down to business. Now, when it comes to buying stocks at a cheaper price than what they are currently priced at, there are certain options contracts that will help you accomplish that goal. In order to do that, the first thing we need to know about is selling options versus buying options. Now, I am about a 90% option seller. All right, so 90% of the time I am actually selling options. Well, why is that? Because I personally like a higher probability of profit. I like making money more times than often versus having a 50-50% chance or even less. Because most people that buy options, they actually do it the wrong way to begin with. And that's why the statistic is out there that most traders actually fail. Well, that's because most people are doing it wrong to begin with. And so with selling options, you get a higher probability of profit most of the time. And the quote unquote drawback is that you make a little bit less money versus when you buy options, you have a chance of making a very, very high return. However, the chances that you actually make money at all are a lot slimmer. All right. And there is one specific buying option strategy that does work pretty well if done right. However, this video is not for that. And so most of the time when it comes to selling options, it'll have you looking like these two two fellas right here with plenty of money, and buying options most of the time will have you looking like this little fella right here. And he's a cute little fella. He just doesn't have as much money as the option sellers. Now, when it comes to selling puts, you are making an agreement to buy shares. All right. When you sell a put, you are making an agreement to buy shares. And if you were to sell calls, you are making an agreement to sell shares. And for today's video specifically, I'm going to talk about selling puts. Now, if you're new to selling puts, I'm going to go through this thoroughly. However, if you are already experienced with selling puts, make sure you stay to the end because I'm going to show you a better way to go about it. Now, when you sell a put, you have one of two objectives or possibly both. All right. And so the first objective is to just generate income. It's to make money. That is always typically the bottom line. However, you can also use it to buy a stock at a cheaper price. All right. And I like to do a combination of both. All right. So let's move on. When we are selling puts, we are basically selling insurance, but for stocks. Now, I'm assuming that you probably have insurance on your car. And the only reason you have insurance is because you are fearful that you could possibly get into a crash. And if that were to happen, you want the insurance company to take care of all the expenses for you. And for them doing that, they charge you likely a monthly premium that you pay to them, and they get to keep that money whether you get into a car accident or you don't. Well, that is literally what we are doing when we are selling puts, except in this case, we are the insurance company. And instead of a car, it's for stocks. And so we could come over and say, hey, you own ABC stock, which is currently at $100. However, if the stock were to crash, quote unquote, and come down to, let's say for this example, $90, then I will buy the shares of that stock from you. However, for me making this agreement, you have to pay me $200 right here, right now. And then once you guys have made that agreement, what happens from here is if ABC stock stays above that $90 mark that you set, then you just keep that $200 and you go about your day, and you could do that exact same trade over and over and over and over again. However, if ABC stock were to go down below $90, well, now you have to buy 100 shares of that stock per contract that you have. Okay. And in this case, we still keep that $200 premium that we received. However, now we just need to buy the shares of the stock. Now, here's the cheat code. You would only do this on a stock that you would actually like to own. And when you only do it on stocks that you would like to own and set your strike price to the price that you would like to own it at, then that is an absolute cheat code. Because it's like, on one hand, you will get paid just to wait around for a stock price to drop and it never happens, or you get paid just to wait around and the stock price does drop, and now you get to buy shares of a company that you actually like and you got paid to do so. And that is an insane cheat code for the stock market. But let's look at an example here. So let's go ahead and we're looking at selling a put, and we have Apple stock that is currently trading at $175. Well, what we could do as the put sellers over here is we could come over and say, hey, I would like to buy your shares at $165. So our strike price is now $165. Now, we can also set how long we want this contract to be open. And so that would be our expiration date. And in this case, we did 30 days. Now, and for agreeing to this contract, we received $200 upfront right here, right now. Well, here's what will happen from here. We can see from this P&L chart, if Apple stock stays anywhere above that $150 strike that we set, then we just keep that $200 that we received and we go about our day. All right. So it doesn't matter if the stock price goes up, whether it stays the same right at 165 or even goes down some, as long as it stays above 150, then we just made our money and we will go about our day. However, if the stock price were to drop below 150, well, now we have agreed to buy the shares at 150. And so we are getting the shares of a stock that we really like to own at a discounted price compared to what it was when we first looked at it. And we still keep that $200 that we received. And so that is exactly how selling puts would work. However, there are certain data points that I would like to look at prior to placing any trade. And so we will go ahead and look at those metrics. But first, I have to give a huge shout out to the sponsors of this video, Moomoo. Now, beyond just being an amazing brokerage and one that has tools way better than most brokerages that I know, right now they have one of the most amazing sign-up offers as well. When you open up an account using the link below in the description, not only can you get up to $1,000 of NVDA stock, but you can also get up to an 8.1% APY on your idle funds. And that is just crazy. But what was just added, because I went to Moomoo and I said, hey, this offer is amazing, but how can we make it even better for the fans of my channel specifically? And that's when they added in an additional $100 cash reward when you open up an account using my my link below in the description. You will not find this anywhere else. So make sure that you take advantage of this. If you already have another brokerage account that you're using, it's still worth it to go ahead and open up an account here and just deposit some money in it just for these rewards alone. Like that alone is a good reason to open up an account. But the tools that Moomoo has are amazing. But on top of all of that, their mobile platform is next level. Taking a look at their mobile app, so you can see here, you can see a lot of general information such as earnings and earnings calendars and earnings beats and economic calendars. However, what I like most is this investment theme. So if we click on investment themes, here they categorize stocks based on what they're impacted by. And so what I like most is this one that's called Nancy Pelosi Portfolio. Now, if you're not familiar, Nancy Pelosi is a US Congresswoman, and she seems to always select the right stocks right at the right time. And so Moomoo conveniently put all the stocks that she is currently investing in right here on this list for you to see. And so if you just wanted to follow what Nancy Pelosi is doing, you could follow this investment theme in Moomoo. But go ahead, check it out. The link is below in the description. You can get up to 60 free stocks, and you can only get that with this link. So go ahead and click it, and you can thank me later. All right, so now we are in the Moomoo platform, and the first thing I wanna do is I wanna look for any levels of support. Now, support is just any level where the stock price bounced off of previously. And so what I'm gonna do is I'm gonna go ahead and hide these Bollinger Bands here. But if we look here, we can see that the stock price recently bounced off of this $22 level 2 times. All right, so it went up, and then this candle went down a little bit, then it bounced up, and then it came down, and then went below $22 just for a few hours, and then bounced right back up, and it's been going up ever since. So I can see that there is some type of support at $22. However, let's go ahead and add these Bollinger Bands back into the mix. Now, Bollinger Bands are great because they show you the range that a stock price is expected to trade within. And normally about 95% of the time, it's pretty accurate. And so this middle line here is the 20-day moving average, and then the top line is 2 standard deviations above that, and the bottom line is 2 standard deviations below that. All right, and so most of the time it will trade within the Bollinger Band. And you can see that going all the way back to a year ago. We can see the few times where it bounced out right here, then it bounced right back in, and it stayed within for a while. If it bounces out, it comes back in, and that pattern just consistently goes on and on and on. And you can even see that as we speak, because just for the last few days, it bounced outside of the Bollinger Band, and we can see that the price is coming down a little bit right back inside of the Bollinger Band. Now, since the stock price is currently up here, I could use this middle Bollinger Band line as a level of support. And it's currently right around $23. And so just looking at this chart, I know somewhere around $22 to $23-ish, we may see some level of support. And I like SoFi as a company, and I would not mind owning shares of the stock. So let's go ahead and go to the options chain and look at some more data. Now, the next thing we need to do is we need to select our expiration date. And as far as expiration dates, I want to go up to 45 days out. Now, why is that? Because within 45 days, an options contract's time value will decay the fastest. And us as option sellers, that is exactly what we want. Because time value is a huge factor into an options premium. And so once we have collected the money from the options premium, we want the time value to go down lower so that the contract is worth a lot less, and then we can pay back a smaller amount than the amount that we received. Okay, so if you don't remember anything at all, just remember we want to go within 45 days. And so I can come over here and you can select any date that you want within 45 days. So I could do 17 days out, 24, 31, 38, any of those are fine. All right, but for the purposes of this video, I'm going to go ahead on out to the 38 day. And so that is October 3rd. So let's go ahead and open that up. And if we come and look over here, we can see that it says EM plus or minus $3.78. And EM just stands for the expected move. And so the expected move is just the largest move that the option market currently has priced in for this specific stock for this specific date. And so it is currently saying that the biggest move for SoFi by October 3rd would be a move of $3.78, either on the upside or on the downside. And so what I would want to do is just subtract that amount from the price that SoFi is currently, which is $25.85. And that would get us somewhere around the $22 mark, which, as we said before, we saw some levels of support at the $22 to $23 mark. And so the very last data point that I like to look at is the delta. And so if we come over here, by definition, you can see delta in this column here, but by definition, it shows you how much the options premium will move per a $1 move in the stock's price. However, that is just technical jargon. Most successful traders will look at the delta as the probability of the event occurring. And so if a delta, let's say we go down here and it shows a 0.35, to me, I look at that and I say, all right, there's about a 35% chance that SoFi's stock price, currently at $25, drops down to this strike, which is $24.50 by this expiration date. All right. And so if there is a 35% chance that that occurs, that gives me about a 65% chance probability of profit of just making my money from the premium and going about my day. Now, for me personally, when I'm looking to just collect the premium, I'll usually go to a delta of 0.20 or less. All right. However, if I am really interested in buying the company, then I will go up to a delta of 0.30. And so let's go ahead and look at this strike price of $23.50 because it shows a delta of 0.27. All right. So it is under that 0.30 delta that we want to stay up under. Now, if we look over here at the premiums, we can see the bid and ask prices are between 0.92 to 0.95. So when I sell a put, I will automatically receive anywhere between $92 to $95. All right, these prices shown here are per share. And since every contract is worth 100 shares, we would just multiply the amounts that we see here by 100. And so that'll get us to $92 to $95. And so if I thought that that looked good, which I do, I would go ahead and click this button here. And from here, you just need to select however many contracts that you would like to use. Now, however many contracts you do is totally up to you and your account size and your risk tolerance. Now, let's say that I personally was looking to buy about 1,000 shares of SoFi. Well, what I would probably do is I would probably dollar cost average into the position. And so for an example, let's say if I wanted to do 10 contracts total, maybe I do 4 today. So I would come over here and I would go to 4 contracts, and we could see that I would receive $366 right here, right now, for just agreeing to buy SoFi if it were to drop below $23.50. Okay, and then maybe in 2 days from now, I'll come in and I will repeat this process for another 4 contracts. And then maybe a week from now, I'll go in and I'll do those extra 2 contracts, and then I will have a fully built position. All right, and then from there, I would just need to wait to see if the price of SoFi stays above my strike prices or it drops below my strike prices. And if it doesn't, if it just stays above, then I just go about my day and I make my money, and I can do that trade over and over and over and over again. However, if the stock price were to drop below my strike price, then I have agreed to buy the shares, and I will turn around and start selling covered calls. All right, but covered calls is for another video. But let's go ahead and look at the P&L chart for this trade. So if I come up here and I select curve, we can see if we look at these prices up here that show at expiration that we will get $366 immediately. And that doesn't matter if the stock price goes up, if it stays the same, if it goes down some. $366 is the most that we can make from this specific trade. However, if the stock price were to start dropping below our strike price, which was $23.50, well, then you can see, looking at that number there, we start to make less and less and less. And then our break even point is right at $22.58. And so at that point is our break even point. And if the stock price were to continue to drop, then the contracts will become worth less and less and less. However, remember, we don't care because we were fine with buying the shares of that specific company at that specific price. And so if this were to occur, then you should actually be happy because you are getting the stock that you really wanted at a discounted price. And so for me personally, when I am doing selling puts in order to possibly buy a company, I absolutely do not care if the stock price goes up, if the stock price stays the same, if the stock price goes down. I honestly do not care because I am fine with the outcomes of either situation. All right, but you will only feel that way when you are doing this on a stock that you would actually like. Okay, now if you decide somewhere within the trade that you do not want to own shares of the company, or you entered into the trade to begin with without actually wanting to own shares of the company, then if the stock price were to drop near your strike price, then you just want to make sure by expiration that you get out of the trade because you are agreeing to buy the shares at that strike price. And you will be forced to do so if the stock price is well below your strike price. All right, right? But SoFi is a good one. It's a great one for people with smaller accounts, obviously, because it's only $25 currently. And so let's look at another stock. Let's use Oscar Health, ticker symbol OSCR. We within the Trade to Freedom community have been trading both of these stocks very tremendously and making excellent gains on them. And so now we have the chart pulled up for Oscar Health, and we will follow the exact same process. So I'm just coming over here. I'm looking for any levels of support. And clearly right here where this middle Bollinger Band is, we can also see that the stock price kind of bounced off of that. And that shows us right at the $15 mark that there is some level of support. All right, so it's currently $16.88. And so if I were looking to go ahead and place some trades on it, which we do have trades currently going on for this stock within the community, but I would just come over to this options chain. And now let's go ahead and select the exact same expiration. And what I want to do is I want to come right up under that level of support. So we said it had levels of support at $15. And so I would probably like to come to the $14.50 level. So I want to go ahead and follow the steps. So let's look at the expected move, which is $3.15. And so if we were to subtract that $3.15 from the current stock price of $16.86, that'll put us around $13.70 roughly. And so $14 is close enough to that. So I could come down here and look at this $14 strike, which has a delta of 0.19. And right now pays anywhere between $50 to $60 per contract, which is an amazing return at the strike of 14. All right, that is well over a 4% return. However, again, if we wanted to be ultra aggressive because we were fine with buying the shares of the stock, then maybe I do come all the way up here to that $15 level, because I know that there is a good chance that it bounces off of 15. However, if it were to come below 15, then I am absolutely fine with buying the shares of the stock. And the returns that it has currently are just astronomical. All right, getting $80 to $90 per contract for a $15 strike is amazing. So let's go ahead and do that. And let's assume the same thing, that I was looking to buy about 1,000 shares of this stock. And so we'll come over and we'll do the same thing. I'll start off with 4 contracts. And so I'll just select my contracts to 4. And so we can see that I received $340 right here, right now. And then let's go ahead and look at the P&L curve. We can see that the stock price is currently right here, $16.80. And if it goes up, I keep the 340. If it stays around the same, I keep the 340. If the stock price even goes down some, I keep the 340. However, if the stock price were to start dropping, then I start to make less and less and less, and my break-even point will be $14.15. And then if the stock price were to continue to go down lower than that, then the contracts would become worth less and less. However, again, we were fine with buying the shares of the company at the strike price that we selected. All right, and that is exactly how I use options in order to buy shares of a company at a huge discount and get paid for doing so. And that is one of the biggest cheat codes in the stock market today. And that's it for the information that I wanted to give you about trading. However, I wanted to leave you guys with a special message. Now, I was honored to be a VIP member at InvestFest just this past weekend in Atlanta, Georgia. And there were a ton of amazing speakers. However, one of the speakers that really stood out to me was Steve Harvey. Him and Charlemagne came out and they were talking about business branding. And now typically I just sit and I watch and I gather all the information. However, for some reason, I pulled out my phone and started recording Steve Harvey talking right at a specific moment. And I believe that it wasn't just a coincidence that I started recording right at this specific moment. I believe that there was somebody out there that needed to hear this message. And so with that being said, here's the message. Make sure you listen to the end of it because somebody needs to hear this. But I'll see you guys in the next video. Peace.
Make each other great, y'all. But let me tell you one other thing. You try to find people who are like-minded on your journey. That makes the journey simple. But let me say something to all of you that invest money in yourself. You're the chosen one. You're the chosen one. You've been chosen. God picked you a long time ago. That's why you're the first one in your family. God picked you. That's because you're the first woman that was strip out like that. That's because God picked you. You're the first one to open a business or want to be something regular than just an employee. That's because God chose you. Now, when you're the chosen one, it's something come with that. It's a responsibility that comes with being the chosen one. Somebody got mad at me the other day because I introduced myself as I'm the one and only Steve Harvey. Well, how you gonna call yourself the one and only? Do you know another one? You see the other thing anywhere? So, you know, man, when you are the one and only, God has created over 8 billion people in this world. Now, if you tell me God ain't put something special on you, you tell me how that happened. You are the chosen one. Act like it and take the responsibility to come with it.